Although this is labeled as a panel, we're actually not going to do it as a panel, and I'll explain what I mean by that. We're going to pretend that we're all having lunch together, and we're just having a conversation. So I'm going to put out a topic, and we'll start discussing it. This means that the moderator's job has been eliminated. We're automating the moderator. It's going to be the empty chair down there. So what I wanted to talk about, just to start things off, is when I was living here in Paris until very recently, I would often find that I had difficulty communicating, such as ordering a baguette in a particular way, because I was speaking English and they were speaking French. And when I'm dealing with startups, I find that I oftentimes run into these same issues of, I'm speaking one language and they're speaking the other, but it's all still English. So it's words like velocity, product, plan, things like this that mean totally different things in a big organization and a small company. And so I wanted to ask my fellow lunchmates here, are you noticing this as well? And now that we've been doing this for a couple of years, are things getting better? Are we learning to speak each other's languages?
Yeah, I think I've been in the unique opportunity working at R3, which started as a consortium back in 2015 as a sandbox that brought financial service firms such as insurers, banks, exchanges, autos together to really test blockchain, but in a way I don't think they were quite used to. We did agile development. Projects were 6 to 12 weeks, and at the end of 12 weeks, they had to assess if they should move into a production environment or if it wasn't a success, it was a failure. So I think that mindset has been a shift for some of these larger organizations, and also working together, collaborating. They used to think their back office was their secret sauce of their business, where now sharing in a very open environment what their pain points are and how together, on distributed ledger technology, they can actually streamline those processes.
I can add something. By the way, this is the worst lunch spread I've ever seen. It's not very satisfying. Sorry. So we've been running for about 3 years, and we partner with InsurTech startups, other disruptors. And if I reflect back 3 years, I guess the mood, if you like, of incumbents was one of fear and suspicion, maybe loathing. I think over the course of the 3 years that's changed, and it's much more around collaboration. So I think maybe that means we've learned to speak the same or a similar language. We can order a baguette together, perhaps. But it's definitely, there's a sort of mood shift, I think, that where we almost respect what the other party brings to the equation. And I think that's definitely, in 3 years, I've definitely seen that shift.
Yeah, I'll chip in as well. So I spent my career in the insurance game, and we started Naked Insurance a couple of years back. And I think we found, very much the same sort of thing. We looked at the market and said we want to build a business that operates like a technology business. But when we use the word product development or any of the sort of words you talked about, we understood that as an insurance concept. But of course, we needed to hire predominantly developers and people in the tech game. And it did certainly take us some time to kind of find each other. And quite often, I think even to this day, we had one of our Scrum Masters saying, she wants to move into product management. And one of our actuaries kind of looks at her like, over my dead body, is she going to be setting prices and underwriting rules? So these things certainly do happen, yeah.
Is it getting better?
Yeah, absolutely. I suppose you just got to keep getting people to communicate and moving it forward. And I think, look, there's sort of each sort of word that you use is kind of trying to encapsulate something important, and it has a history, a legacy, which I think is worth understanding, and often kind of just trying to bring people to see the perspective, the discipline, if you like, if you're talking about sort of the difference between product management or product development, and what those terms are trying to bring across, and actually finding the right definition of these terms for each organization. Certainly when you go into the market and hire people, you need to sort of revert back to the standard definitions. But we've certainly found at times we'll move away from those because for us as a group of people, we want something different.
And I would agree. Within blockchain, I've started to see insurers and reinsurers start to collaborate together, forming consortiums like B3I and Riskstream, where I think, 4 years ago, that wouldn't have been a comfortable spot. And also to deliver product, not to act like a typical insurer where, you have the runway and the budget to last a couple of years. It's really timely delivery. And if you can't deliver, it's like you have to pivot. And I think you're starting to see that, large insurers just kind of with that mentality now, which is nice.
So I'm going to ask a question. I'm sure Mark will have a view on this as well. If you look at some of the recent fundraisers that have happened, companies have raised enormous amounts of money. And I'm just reflecting on what you just said there, Ryan. Like, is there a right amount? Like, too little versus too much? How do we think about that? What's the right amount that you should have in your tank that gives you discipline on one hand but runway on the other?
You have to answer this one. Because, you're right, I do have an opinion on everything. But, for us, so one of the biggest risks for us in working with an InsurTech partner in particular, and we work with other bigger disruptors, but with the InsurTechs, is that they have sufficient runway to get across the line, whatever the line is, whether it's 12 weeks away or whether it's 6 or 12 months away. So for us, that becomes, a key risk in terms of, do they have liquidity, do they have enough money in the bank, gas in the tank, whatever you want to call it, to get across the line. So I can't define what enough is because it depends on how much they're burning, but that's definitely right in our focus at the moment, actually. How much is enough?
So I guess being one of the fellow startups up here, having, we raised 127 million back in 16.
Well, that's enough.
So in regards to, I think it's more important like the strategy and being able to pivot and the management on there. And to your point, having enough gas in the tank to actually have the runway to create a product. So, we started out as a consortium. We did 200 plus proof of concepts, testing with insurers, banks, asset managers, to realize none of the protocols out there in blockchain were fit for purpose. So when we went out to raise money to build our own platform from the ground up. And our CTO jokes it would have been a lot cheaper and easier to kind of fork another one out there. But due to the requirements of everyone out here, security, scalability, it just wasn't feasible. And now continuing on that, so we started out as a sandbox and then became a product company. So for us, it was really being able to pivot and have that runway to do that.
Mark, you must have had partners of yours underestimating the regulatory complexity and not realizing that getting through all of that with a certain amount of runway is going to be tricky.
Yeah, so we kind of, our job, if you like, is to help startups navigate this tricky landscape, and I think they typically underestimate how complex it is and how long it takes to get things done, actually. And so, I can say it's our job to help them navigate, but they also need this kind of appreciation of what that takes. And actually, the better startup partners probably have people with some kind of knowledge of the industry they're disrupting. I like the fact that they're disrupting us, by the way, because I wouldn't be here. I wouldn't be sat here otherwise. But I think having some kind of appreciation of what you're disrupting and the pitfalls and how difficult it is to deal with 50 departments of insurance in the US or whatever it may be is definitely an advantage. So go in with your eyes open, I suppose, is the advice.
How do you find the companies that know that ex ante? Like, how do you find companies that both have a really good idea about here's how I can change this industry, but also understand the industry at the same time? Because I find that that's actually a rare combination.
Well, so by the way, just to give you an idea of numbers, and you're in a similar game to me, we've met more than 1,000 startups over the last 3.5 years. So there's this massive kind of wave of opportunity, I would call it. But we funnel that all the way down to working with about 20 live partnerships. We've got around 50 relationships probably. In the early days, so the early days being 2016, doesn't sound like that long ago, but it feels like a lifetime almost. If I'm honest, I think we were quite wowed by just a cool founder with an idea or something like that, and maybe a bit of money. Latterly, it's been much more about how well-rounded is the team. You must see this as well. So, do they have someone with insurance knowledge? Do they have sensible backing? Maybe have they had an exit before, so they know actually how to build a business and create value. So, I think we look at it much more in a kind of rounded sense than perhaps when we did 3.5 years ago, where we thought, oh, that's a bit cool. That would be cool in insurance. So we've grown up a little bit. I think we're more discerning, I'd like to say.
Ryan, 200 proof of concepts. That must have been an enormous amount of work, even if they are 6 to 8 weeks. How do you think about what Mark said in terms of kind of focusing down on the things that really matter.
Yeah, and in the 200 proof of concept, I think one of the interesting stats that comes out of that, probably like 85 to 90% are actually moving towards production, a relatively low number. So, having that mentality of, fail fast or succeed. And when we started out, all the findings were shared with all of our ecosystem members. So like what worked, what didn't work, what was positive. So, we had a lot of learnings ourselves from, and this was typically with banks and insurers developing themselves. And I think early on we realized that, insurers that didn't necessarily want to be in the software business. They'd have some successful POCs that actually went to MVP, but then when it came to commercializing, setting up the IP, the governance structure, they weren't well positioned for that. They'd much prefer to have a third party do that. So the whole idea of blockchain was decentralized, no one controls it, but yet at the end of the day, due to the fact that it's highly regulated and highly kind of scrutinized, that it had to be, from a go-to-market standpoint, some third parties, and some of the times it's startups that, went there. So I think there were a lot of lessons learned. And also, I think from the experience of, working with the insurers, there's been a growth in like the innovation hubs, but they don't go to production unless they kind of graduate to the business side. And that's kind of a progression we've seen over the years also.
Alex, you have a really interesting relationship with Hollard down in South Africa. So if you haven't been to Hollard's campus, they have this gorgeous campus over the hills of one of the suburbs of Johannesburg. And to get to Naked's office, you kind of walk through these 150-year-old buildings, absolutely gorgeous views over the suburbs, and you get to this little cottage that has Naked. Can you tell us a little bit about your relationship there? How did you form that? That's kind of like one giant proof of concept that you've been doing, a little bit the opposite of perhaps some of the other approaches that our other diners here have talked about. Can you tell us about how you structured that?
Yes, we are very lucky in terms of the location, I think. Most people probably think Joburg is pretty ghastly in many ways, and I suppose it is, but certainly we're in a nice position. And we're in a nice position, I think, with Hollard as well. So they're the number 2 non-life group in South Africa. And it's something which I suppose we cultivated over years. I was in consulting and some of my co-founders as well, and got to know quite the organization very well. And a lot of the senior management very well, and that's mean that we've actually had a very positive experience. I think many businesses like ours in working with larger organizations have found it incredibly painful, incredibly slow to get anything done, too much compliance and the rest of it. And I think because we have the right sort of senior level buy-in, but also because we know the inner workings of the organization. We know the regulations and what needs to be done. We've found it really smooth sailing. They've been incredibly supportive, and we've been able to focus the vast majority of our energy on actually building the business and not getting caught by surprise by new requirements and new reviews and that sort of thing. I've sort of been mulling over what the general principle is there, and I can't say I can tell you this is the way to do it for businesses in our sort of situation, but I do have a sense that having spent a bit of time in the industry, a bit like Mark was saying, can count in your favor. It can be done without it, but I do think that it allows you just to be aware of where you're going, to plan a little bit better, to know how to sort of move your way through that, not get tripped up, from time to time.
I'm going to ask you a question. So, is it fair to say that your insurance partner needs to apply the right degree of patience, because these things take time to nurture, if you like, and you can't take a kind of a 6 or 12 month horizon on this. You need to take a 3 to 5 year horizon probably, and that's typically what we would do. Do you find that?
Yeah, patience is an interesting word when it comes to startups. I suppose we all feel under a lot of pressure, with runway and just the way how quickly things are moving on. But it's interesting you say that. Our chairman was the former CEO of Hollard. He's now in the private equity firm that invests in us, and he regularly says to us, I think we can wait on this. Let's give it a bit of time and see how it develops before we ramp this up. And often personally walk out feeling he doesn't get it, is frustrated. But I think in the fullness of time, there's a lot of value in patience. There's a lot of value in recognizing that insurance is somewhat inherently kind of slow moving. I mean, not all the way, but we must just recognize that there's a bit of a journey to walk.
I think also having, senior sponsorship. You mentioned your chairman as well as Hollard being like a big sponsor. It's new technology. It's emerging. So, fitting a round peg in a square hole, it's new to them. They don't necessarily understand all the nuances of it. But having senior sponsorship from our side has been extremely helpful, accelerating these projects and getting them through procurement and InfoSec, because the teams don't necessarily understand exactly the technology and the full stack. So that's been really helpful from our standpoint.
How long do you think the patience can last? Because I think if you remember the previous speaker, he showed that kind of gap, and I think we're somewhere in that gap. I don't know where, and I don't know how long it's going to last. But if I look, we and I think Mark and a number of others through the industry, including our three sponsors, have put out a significant amount of money. We've laid some bets on the table, and the roulette wheel is spinning. We hope that it stops before we get too tired and have to go home for the evening. So how long does the patience run?
That's a great question. I mean, I think the key for us has become, I mentioned it earlier, around a stronger focus on partner selection. So be as I mentioned, go in with your eyes open, and if you're backing a partnership, then you need to back it, right? So I would say don't go in kind of half-hearted. If you're in, and then you kind of put everything into that relationship and try and make it successful. And they won't all work out, by the way. The wheel will stop and it'll be a 0 or whatever on the roulette. But I think the key is to, in the early days when we were doing this, I keep referring to it as the early days, but we thought it was a numbers game. We'll try and launch 10 partnerships a year or something like that. In fact, we did that in our second year believe it or not, as our target. Of course, it's not a quantity game, it's a quality game. So we're very much focused on effective partner selection and then building a partnership and then invest in it in time and money and see where it goes.
How many partners do you think you'll have in 2 years?
So we've got around 20 at the moment, and some come in the top and some eventually drop out the bottom one way or another. So I would have thought it's between 20 and 30 consistent, I would think. And then of course once you've established the partnership, then of course the value grows, and we're finding that we're doubling our volume year on year. We expect to write quite big numbers in the next 2 to 3 years. So actually, you don't need many successful partnerships to make quite a good, scalable, quality business. So it really is about quality, not quantity, I think.
I was going to say that, I mean, we look at, I think partner selection is really critical. I mean, I think for the larger organizations wanting to work with startups, we've managed to get, quite a lot of sort of one-offs and special cases for our circumstances. And that clearly is not something that can scale. It'll create a lot of organizational complexity if you had dozens and dozens of similar businesses all getting these one-offs. And I don't know what the solution to that is. I mean, I think it's one of the sort of inherent challenges for corporates as the world changes this way, trying to get that square peg into that round hole. But so we feel quite fortunate that we have that situation, long may it last. But I think some really innovative models for how you achieve that, how you give organizations enough flexibility while still giving them the value of the larger organization. I mean, there's a lot to be seen there, I think.
In regards to blockchain, we're definitely coming off the hype cycle. If you look at the Gartner hype cycle, we're kind of coming off of that. But we're starting to see like the ROI reports come out about the applications that are going live, which I really think that's going to help, kind of reinvigorate the kind of the excitement about blockchain, seeing these deployments go live and the true cost savings. Because like the first kind of series of ones that are going live are really on cost savings. So lowering the expense ratio, which is typically 25 to 35%, down to something much more manageable. But kind of the newer POCs, the newer projects that we're working on are really the convergence of multiple technologies. So AI, telematics, GPS on, cargo on ships to start, modeling towards a usage-based insurance. So I think that, the next iterations of projects are going to be on the convergence of technology, not just blockchain from my seat.
We're waiting for the waiter to come because this is a French restaurant. And so it might be a long time before the waiter actually gets here. One of the rules of our little lunch here is that everyone has to ask somebody else a question. So Mark and Ryan.
My question would be around deployment, and you actually, in regards to deploying into, a large insurer and working with them in the back office, because that's been it's not necessarily the technology. It's for us, it's been getting through the InfoSec teams, the procurement, the technology teams to actually deploy nodes and scale and understand. So I'm curious, is that a pain point that you found as well?
Well, to be honest, we've largely avoided that. So I think early on we were under quite a lot of pressure to integrate into a lot of their systems and work with their back end. We made the call right up front that we were going to rebuild everything. So we've built the entire stack, and I mean, if there's one decision we've made correctly, that's it. Our ability to build quickly and I think perhaps not quite zero on the cost base, but to get as close to that as we possibly can, I think is a reality that is starting to come through in our numbers. And certainly if I compare it against their cost base, the world is going to change fundamentally. You can't compare. I mean, I wanted to ask you a question, Ryan, just about I suppose when you define the organization by the blockchain, it must, and then the hype cycle kind of eases off. It must make things challenging. I mean, do you think that? Do you think there's a kind of a broader space? Do you look at things outside of the pure blockchain? And I mean, how do you fit in what you're doing with everything else that's going on?
Yeah, we're part of several organizations that are focused on other technology than just blockchain. So I think of, Moby, which is typically, an automobile industry in the US with OEMs, large manufacturers, that's looking at like smart cities and tokenization and really creating usage-based insurance models for autonomous vehicles is what they're mainly looking at right now from an insurance standpoint. So we definitely look broader. And all of it's kind of like this next generation fleet management, next generation cargo, and all different things like that. So looking broader than just blockchain, like when I think of like the ledger blockchain, it's really just the source of truth. What I see is what you see to really allow for new products to kind of evolve off of it.
Okay, so you're making more of a conceptual shift than necessarily a specific technology.
Correct.
My question's for you. So back at you.
All right.
So we
In the
talked
hot
about the hype cycle on blockchain, but what's your view on where InsurTech as a whole is? Because I guess we're maybe 5 years in, you could say. Where are we now, and when does the hype end, and when or is it over? Let's hope not, because we're all here, right?
I don't think that it's over, and I don't think that it will end in the sense that if you look over the history of technology, every 20 years in insurance, there has been something that's come along that's fundamentally changed the industry, and there have been winners that have emerged from that. So it was the mainframes in the 1950s. You saw AIG, Travelers, the big multi-lines coming out of that. You had mini computers that enabled the specialists to kind of pick off from the big multi-liners. So W.R. Berkeley in the 1960s, for instance. RLI, still one of the most innovative companies out there. You had the spreadsheet, Lotus 123, in the late 80s and early 90s at the same time as you had Hurricane Andrew, and that's when the Bermuda companies all came about. Now, again, 20 years after that, we've got natural language processing, machine intelligence, mobile, cloud, all these new technologies that we're here talking about today. So I think that there will absolutely be some winners that are going to emerge from this. I don't know who they're going to be. I suspect you've got some in your portfolio. Hopefully we have some in ours. But I think that if we're sitting here 20 years from now, there will be some companies where we'll look back and say, wow, this was really different. I think what's going on in blockchain is going to fundamentally change in certain ways. Again, I don't know what the winner is going to be, but I think there's something there. I think automobile insurance and all of the changes that are happening there is going to be an area of big focus, and I love the South Africa market because it's an extremely innovative market. In many ways, South Africa has led a lot of the change that we're seeing, and yet we continue to see great innovations coming out of South Africa as well. So, look, 80% of the companies that are here might fail, but if 20% of them are huge successes that we're talking about 20 years from now, I think what we're doing today is going to be remembered as a great time in the industry. What do you think?
I completely agree, Ed. And actually, I guess, if you look at the people that we're now attracting to the industry, so we've hired a tech guy in the US from Apple, so we call him Apple Guy. He's actually, I think he's got a real name, but I'm not sure what it is actually. But so we're starting to attract, and this is one example, but we're starting to attract talent from outside of the kind of traditional pool of insurance people. Not that there's anything wrong with the traditional pool, but this kind of blend that we're now building and attracting younger, more diverse people, if you like. Can't say younger, of course, but more, a more diverse crowd into our world is fantastic, right? So to me, that says that if you can attract this talent, then therefore it's definitely a thing. Fingers crossed, right?
Well, we all hear about this talent gap, and everybody's wringing their hands over it, and people are leaving the industry, they're not as attracted to it, and yet I see the opposite. I see tremendous people coming in, just like you mentioned, Mark. I mean, Ryan and Alex, are you seeing that as well? Are you able to attract people into this industry who might not have been otherwise?
Yeah, I mean, it's kind of our opening line when we recruit somebody. It says it's not like working at an insurance company. Certainly on the development side. It's probably similar over here, but in South Africa, as a developer, that's where kind of the elephants go to die when you move into insurance. And we've had to sort of set a really clear distinction so that people don't get that mixed up. But I think also, that's also totally unfair. I mean, there's a lot of extremely good developers and engineers in insurance, and it's also changing and improving. And I think that InsurTech has enabled shifts within the larger organizations for them to attract better talent as well. So I think it is a good news story in terms of the movement of talent in the industry.
And I would also say from our standpoint, core to our platform is based on Java. It's Kotlin, so it's based on Java. So we've seen a lot of also rebranding, and we've done a lot of training. So, typical insurers, like developers, have relearned a new talent. So we've seen that shift as well. Because, it's in regards to hiring, especially in blockchain, it's difficult. We found it a lot easier to put people through boot camps and training on our platform and kind of upskill them. And several of the insurers are doing that with us.
I think the industry's still got a bit of work to do in terms of making it appear attractive. So I've got a couple of kids. One who's, I know I don't look old enough, but she's 22. And I try and convince her that insurance is kind of a cool place to work. And then she looks at her dad and kind of, shakes her head and thinks, you don't look that cool. So she works at a bank, by the way. So, what can you do? So I think there's still a bit of work to do to make us appear a bit more attractive than the reputation, if you like, because I think actually it is, maybe if it's really cool, you wouldn't call it cool, would you? I'm showing my age a little bit, but I think it is a great place to work at the moment. That it's given me, at 50 years old, another kind of lease of life, really. So I feel like I'm building a legacy for what insurance is going to look like in the future, actually. So maybe it is cool.
Cool. We have time for one or two questions. Anyone want to either yell it out or we can grab a microphone?
Hi guys. You kind of topped and tailed the discussion with the cultural change as non-insurance people come into life insurance. Sorry, life insurance. Mark, as you know, I work primarily with life insurers. So, Alex, when you say "over my dead body's kind of a trigger word for us, but you actually just in that statement about I want to become a product manager over my dead body, kind of is the precursor of the last part of this conversation. You kind of said, there's this massive cultural problem between somebody who wants to just look at the data, come in from outside, have none of the credentials of the 30 years working in the space. But the data is the data. And so you're not evolving, you're taking in people, or we're not evolving, we're taking in people with different genetic material. How long is it going to take before we let them actually do their job? I'll start with you, if you don't mind, because you talked about the example.
Look, I think you could have a whole session on the sort of actuarial and data science and that whole space. So I'll save everyone that conversation. But it's an area where we've kind of hired both and sort of put them in the same room and locked the door and seen what's happened. And it's been, I think, very constructive. And so I have a background as an actuary, and I'm not a good person. I used to talk at the university for all the sort of first years. In South Africa, you start actuarial and sort of straight out of school, and I think they stopped me doing that because I do think a lot of things really do need to change, and I think we really can move professions or disciplines in the insurance game a long way with some of the experiences and insights, the methods. I mean, we talked about this language there's so many other business models, subscription business models, and the concepts we can apply into insurance, and I think move the game forward quite quickly.
Excellent. Well, after a long and meandering conversation, we ended up right back where we started. So thank you for the question. Thank you all for joining us today, and thanks to the panelists or the dinner party conversants.